Economist Xhanti Payi joins us on the line to look into the meaning of both Fitch ratings outcome and the shrinking of South Africa's GDP in the first quarter. Good evening, Xhanti. Thank you very much for joining us. Now, was this decision expected?
Good evening. Look, I think that there were two parts. Following from what the other ratings agencies were saying, I guess a lot of people thought that there wouldn't be a ratings downgrade because there are two parts to this. There's the rating itself, the BBB minus, then there's the outlook, which is what they think is going to happen in the future. So they assess everything that's going on in terms of, government finances, they look ahead, and then they say, if we look ahead in terms of our expectations, we think that the volatility is stable, it's unstable, it's negative, it's positive. And in this instance, they have kept it stable, which I think was the part that was surprising because many people would have thought that they would at least change the outlook to negative given some of the political issues they themselves raised, institutional issues, and especially the growth trajectory. So the outlook itself is something that's surprising, even though everybody might have expected that the rating itself would not change.
Now, Xhanti, are we off the hook yet, or is it too early to tell, considering we still have a whole 6 months of this year?
Well, I think that the whole, if you look at all the ratings agencies, their responses and their communication, I think we might want to say we are off the hook. Look, there's always, if you look at the ratings methodology, so this is what they apply in their thinking. They're asking themselves two questions. Is South Africa able to meet its obligations, and is it willing to do so? A lot of the things that you see that they talk about is the foreign currency and the local currency, so that, can we meet our obligations, for example, in US dollars, in euro, and can we meet our obligations in rand? So now, the second part will relate to things around exchange controls and what the government might do when we have sort of problems about the exchange rate and things like that. Now, they seem to be very convinced that there is no such problem at the moment, that we can handle our debt levels and all of that. And in the next 6 months, it would not seem that anything would change drastically to move them from that, because they're clearly quite convinced about our story in terms of what is called fiscal consolidation, or how we are managing our debt and how we're managing our spending. So they're quite convinced about that. They're convinced clearly about the policy and the institutions. Unless something drastic happens in the next 6 months, then nothing will change, and you can use the word or the phrase off the hook. Unless something big, like what we saw in December, for example, happens, or something around the elections and things like that. So it does not look like there would be any change in the next 6 months when they come back to review, unless, as I say, something drastic happens.
Now, let's look at the Finance Ministry. Could these assessments be looked at as a victory for them?
Look, I think, the Finance Ministry has done a lot of work there. The Minister of Finance, having led, obviously made a lot of information available, made a lot of plans around making sure that the budget, our spending is managed very well. There's lots of movement around, leakages from the budget, or what many people call corruption. There's certainly a lot of work that has been done in terms of signaling management of parastatals. There's a lot of work being done in terms of the long-term policy outlook, as far as they can, contribute to that discussion. And certainly the team that the Minister of Finance put together to go around the world to convince investors, the team of business people, of labor, and other, political important people that are part of this. And so in all those efforts, it would seem that effort has worked very, very well under the Finance Ministry. So I suppose, by and large, this is their victory. But of course, there's a lot of other people who've been contributing to this, from people who are talking to ratings agencies, people who are in the political arena, in the business field, that are not particularly that aligned to the Ministry of Finance and the work that they do.
Now, Xhanti, we're due for another rating in December, and one critical issue identified as needing attention is policy changes that will attract investment to the country. Are we moving in the right pace in this area?
Look, I mean, I didn't get that, but I think that the area of policy percent.
Xhanti?
Hi. Can you hear me? I didn't hear all of the question there.
Oh, I was talking about in terms of looking at policy that will attract investment into the country. Are we moving in the right direction in that sense?
Look, I mean, it's the numbers that we are seeing coming through in terms of the GDP numbers that we saw today. Investment. Remember, there are two kinds of investment, and I think we always get this wrong. In the one sense, investment obviously is about putting money into production. So people who are building factories, who are building roads and other infrastructure, who are making sure that things are happening, they're investing in farms and other ways in which we actually, produce goods and services in this country. Now, those people can be local people, so small businesses locally, larger businesses locally, individuals who are entrepreneurial, putting money into the economy and starting businesses or investing into existing businesses instead of expansion. Then obviously those people who are coming from overseas who have money and see opportunities in South Africa. Now, in terms of the money that we see from overseas, there are some problems there. And then there's certainly also, if we look at the GDP numbers that came out today, that investment is really under a lot of strain. So we are not seeing a lot of investment. And really part of that situation is the politics that we are seeing. A lot of people are saying, and certainly the people we've been speaking to are saying, look, we are not sure about what is going to happen in the next 3 months, 6 months, whether we're talking about the rand, whether we're talking about, the policy environment that government is thinking, where we are going. We're not quite sure. And so we want to wait and see. And that's where the problem is. It's that wait and see kind of environment. Not so much that people think the country is going to collapse, but they are thinking if they're going to take risk, they want to make sure that things are going their way, that risks are falling. And I suppose investment in that sense, even in the next 6 months, is probably not assured until we get to a place where people who have money to put into their businesses and the economy are sure that it will not be lost through exchange fluctuations or, demand or political issues or any other kind of thing like that.
Now, Xhanti, staying with that GDP figure from today, which areas of the economy are gravely responsible for the downturn?
But I think if there was a downgrade, there would be we would have to see. And this is exactly the problem, is that we are seeing now, there was a time when, GDP was coming down because maybe mining was a problem, manufacturing was a problem, or transport or government. Now we're seeing a much more widespread deterioration in terms of economic activity, and that's worrying. Now, a ratings downgrade would affect, which is a problem that we have now, confidence in the economy. And we are seeing confidence in terms of both consumers, investors, business people deteriorating. And the ratings downgrade would actually exacerbate that. And also, obviously, it would affect the government's ability to borrow. Now, we do know that, the government, in order to meet its intended programs and policy programs, they need to continue to borrow quite a lot of money from both locally and international investors. And the downgrade would make that very expensive and it exacerbate the issue. But what it would most affect is probably this idea of confidence in terms of the South African economy and the government doing the right thing. And it will affect broadly every area of our economic activity.
Xhanti, we'll have to leave it there. Thank you very much for joining us. That was economist Xhanti Payi joining us on the line, speaking to us on South Africa's economy as a whole.